channel, everybody. This is your episode of Monday Madness, Monday's Madness, episode 5. I really appreciate you clicking on the video tonight to join me for this analysis on the market. I tell you what, I got a jam-packed video, so you guys stay tuned. Tonight's focus is going to be the SPY, Apple, Tesla, and a freebie stock, a penny stock that I think has great potential. There are some opportunities in there, also as well as some nuances you need to know before you try to take that risk. And again, I am Coach UV, and I'm represented by the Unique Trading Group, where strategy meets mindset and discipline turns into income. And all right, don't want to hold you guys for long. I know what you came in for, so let's go ahead and hop over to the charts. CPI tomorrow, guys. Listen, you need to understand the economic data. The data is coming out. It will affect price. And if you don't understand that, it's all right. Leave a comment below. You guys want me to make videos on things you're not familiar with, I will make sure to get back to you, okay? I'll talk back and engage for the sole purpose of you guys having some education on some things, okay? And so CPI's tomorrow, for those that do know, CPI, all right? We got some data coming out. And so the market is at a standstill. I think we are very bullish, so to speak, on the SPY. And ever since my previous video, strategic trades and uncertain times, and also where to next video, I talked about us having a pendulum swing back and forth to the upside, and since then we've reached heights of 595 on the SPY, and today we closed just below that. And so looks like we have some continuation and anticipation for the data tomorrow. Maybe the data is priced in already. Either way, we have some bullish continuation to the upside. Now, before I move to any other stock, okay, let me prepare you, all right? Get your pen, your paper, your screen recorder, whatever you need to do, all right? All right, this is what we want to do. We're going to use the daily. We're going to focus on the daily. What I'm doing here is I'm going to mark up the chart. I'm going to prep it and tell you what I think, where we're headed. Okay, and this is how this works. Okay, so we're on the daily. First, we want to grab you a parallel channel. Okay, a parallel channel is here. All right, I want to match it up with my 21 SMA. All right, right on point, 21 SMA. Okay, parallel channel. All right, now what I want to wait for, a pullback. Okay, all right, as you can see here, we have a gap here at 573. Let's go ahead and put a box here that represents that gap. This gap is ironically right above the 21 SMA. If I want to wait for a pullback to get in, right? If I'm not already in a trade and participating in this up movement since this buy right here, and I'm just getting into the market, and I want to try to take some opportunity, I do not want to try to chase, right? I want to wait for a pullback. That's a smart thing to do, all right? And so there's a simple trick that you guys can use, entry and exit tactics, all right? Entry and exit tactics that'll teach you how to find the best entries, all right? And so what you want to do is, all right, this is how this works, okay? I'm going to show you, and bear with me as I navigate the screen. All right, so you have price, all right? Price likes to say it V bottoms, it comes down, and then it zips back up, right? All right, this move, don't chase that move, right? You end up getting a move like this where it grinds higher, okay? That's exactly what this move is right here, okay? That's what this move is right here, okay? And once price gets extreme, like right here, you know, people take their profit because it bounced from a place of demand at my 21 EMA right here, all right? Somebody bought that. People bought that at a cheap price. It went up, all right? They made more money than what they started with. They took their profit. Price reversed back at the last prior swing previous to over here in these ranges, right? And we fall back to test the 21 before we continue up. Now, the same thing could occur, okay? The same thing can occur based on where we are now, all right? For those who don't know, who are watching for the first time, there is economic data, and I will show you that for the sake of your sanity, understanding what I'm saying. There's a website called forexfactory.com, all right? It's right here. I'm not going to go into super details about what it is. You can chat GPT it or Google it. But for this video purpose, the Forex Factory website it gives me economic data. It could be unemployment claims, GDP, which stands for gross domestic product. This is a data economic metric that the Fed and the people who control the prices, they use these metrics to see where we are in the economy. Are we headed to a recession? Are we in inflation? Are the prices of food too high? All right. These are things that average people need to know about, but they don't know about, right? But when you learn to trade and you find out about things like this, you get a better understanding of the world around you, because it does affect you whether you trade or not. Okay. And so tomorrow we have some of that data coming out, and that data on May 20th is going to be what they call a CPI. That stands for Consumer Price Index. So it wants to know what the prices are for consumers on different goods and services. Walmart, clothing brands, sportswear, things of that nature. And we also have some FOMC members speaking. They are part of the Federal Commission, right? And these members, they talk about policy rates and where they think we're headed based on the presidential policies and the economic headwinds. And that's what we have tomorrow. So with that said, going back to SPY, sometimes on the SPY data, when that data is released, it causes a lot of volatility. All right. Price tends to do things like drop a lot, like right here, or go up a lot, like right here. And since we're already extended away from the 21, I want to assume that we could get a small pullback on data. All right. The news could be really, really good or bad tomorrow. But if we're going up pre-market, if the market closed at 4 o'clock, we wake up in the morning while we were asleep, the market has actually been gapping up, because we are actually creating a bullish pattern on the market where we are in bullish territory. But because of things like the fear and greed index, which you have right in front of you, which we're at greed, these things mean that we should be cautious on the market. Shouldn't be overly happy to just think we're going to continue to go up, because as this move over, all right, it's extreme greed. And when people are greedy, you're supposed to be fearful, and when people are fearful, you're supposed to be greedy. And so I want to be cautious and secure my profits on any upswings. Now, that's not financial advice, that's just my personal preference. And so what I want to look for is what we talked about earlier. What I want to see is, all right, I want to see price do this. Okay. All right, I want to see price do this. All right, I want to see price fall back to the 21. All right, right at that price swing here. Okay, looking left, right. Okay, I want to see price bounce here and continue higher to break this open range breakout at the top here. All right, ORB. All right, to retest these highs around 600 and 611. All right, that's one scenario. I want to see that happen on a pullback. Okay, this is an actual trade. You can use the 1 hour, the 15-minute, or the 5-minute. Find the 21, put you a parallel channel up there, and do exactly what I just said. Okay, that means you're being very patient and strategic about your trade entry. You only want to enter in calls on a pullback. All right, if you don't get that pullback and we break above, all right, the best thing to do for you is to scalp, making sure that you are defining your risk on a smaller time frame as it pulls back as a place of demand, making sure that we're creating higher highs and higher lows, which is bullish structure. Higher highs and higher lows mean we can go to the upside. That is technical pattern. Okay, this is a higher high, higher low pattern. Okay, all right, because this is a point of price. It went up, it fell back down, but it didn't fall back further than this one back down this way. Instead, it stopped right here. So this creates a higher low than this one. And this low creates a higher low than that one. And this low creates a higher low than this one. You see the sequence of higher lows, and now we have a sequence of higher highs. Okay, very simple. And the same thing with a downtrend. All right, price falls, reverse back, falls, reverse back, falls. Okay, a series of lower highs and lower lows. You see that? Okay, now that we got that understanding, all right, that's what we have on this chart. And because that's what we have on the chart, I want to trade that accordingly. We do have uptrend, but that doesn't mean pullbacks cannot happen. So that's what I want to wait for. All right, if we open up above 594.85 tomorrow, I'm going to be looking bullish. 594.85 tomorrow would be my place of demand. If price falls below that, I want to cut my call entries. Okay, I want to cut my call trades. I don't want to be thinking to the upside anymore. All right, let me be clear. I do not want to think upside anymore. If this number here, right here, I'm circling around, 594.85. It must hold as demand support, a place where price finds agreement with buyers and sellers, and we want to go back to the upside. If price does not fall below 594.85, I want to think to the upside. So that means SPY needs to open up above this number to be bullish. If it opens up anything below it, I'm thinking bearish. And also, I'm not going to chase the down movement. All right, I'm going to wait for the movement to actually come back to 594. And so let's say we drop. All right, tomorrow we wake up, people chase it because it's been dropping, and it goes back up. The place that I'm looking of an interest is right there at that 595. That could be the 594. 594.85. 594. 1 second, guys. 594.85 is today's close. And so when we open up tomorrow below that and price tries to bounce back to 594, let's say it rejects right there. Let's say it rejects. If it rejects 595, I want to take it back to the lows of 593, 592, and 590. Okay, that's just how to work to retest this low here. All right, for a possible double bottom. These are scenarios you need to get familiar with. Okay, this makes sense. This is what I'm looking for tomorrow. 600 being a psychological level. All right, now just today in the Discord, I talked about in my Discord, Apple. I talked about Apple. All right, we're gonna get that thing ready for you. All right, bear with me as I navigate the screen. All right, stock talk engagement. All right, here we go. Okay, now I have a trade. Let's see, where did we put the trade? Unique outlook. Okay, this is inside of my Discord. Okay, this is what I'm looking for Apple. All right, Apple was currently trading at 211. That was yesterday before 4 o'clock. Down about 2.4%. All right, from the previous close. The day's range is about 207.80 to 212.68 with a volume of approximately 54.7 million shares. Despite recent declines, there's a gap to the upside between 215 and 220, suggesting potential for a rebound. However, if the price fails to hold above 207.06 early in the week, like today was a day, all right, consider positioning for a move towards 205. All right, so your trade scenarios goes as follow. You can look in front of me here. Bullish scenario above 206. All right, this is a free trade for anybody listening right now. If you have a brokerage account, if you don't trade, you do trade right now, or you can watch these things. Type inside of Google AAPL right here. All right, and you can watch price. See how accurate I am. Right, it's 6:04 p.m. 5/19 of 2025. I want you to see my accuracy. All right, so take a picture of this, write it down. I'm bullish above Apple stock at 207.6 price with a target of 215 to 220. Below there, I'm targeting 205 and 200. All right, now that's my Apple play. Okay, now I gave out an announcement. All right, because there were some important things that were going on. If you did not know, all right, there was a credit rating thing that happened with the market Friday. Sneakily, I think they did this report right at the market close. Moody's downgraded the SPI credit rating, so the market dropped. All right, but the SPY dropped 10%, but quickly rallied back. Okay, it's a classic setup we've seen before, is what I was telling everybody in the chat. All right, and we got just that today, where we fell and price regained all of its prices from before, all of its momentum, and so I'm bullish on the market. Okay, I'm bullish on the market. Let's get back over to the charts. Okay, we're gonna check the put and call ratio. All right, PCE, put call ratio. I appreciate you guys staying with me this far. All right, hope that you found some value in this. All right, we are at 7.34. This is really not too good for SPY. The put call ratio tells me how many people are buying puts and how many people are buying calls. And right now, what I see is that there are people buying puts. All right, this does not mean that we're going to fall in the SPY, all right? Because this measures the New York Stock Exchange, the NYSE put call ratio. Puts and calls is something that is bought inside of the options market, which is another term for day traders. People who day trade, they don't just buy shares, they buy the option, which gives you the right to buy or sell 100 shares a piece. Okay, 100 shares a piece. All right, we deal with contracts. All right, so the put call ratio tells me whether or not people wants to go, if they're betting to the upside or thinking trading to the upside more or to the downside. And there's a certain metric that I use. I talk about this in my other videos. I will make a video specifically for the put call ratio and or what they call market internals, which give you an idea on what's going to happen before it happens. Again, market internals give you insight on what could happen before things happen, which is a advantage and an edge for the person who knows it. And right now, this looks like there could be some hedging going on, not extreme put buying, but some hedging. All right, and if that's the case, we could see volatility. We could see volatility tomorrow, right before CPI or after CPI. Okay, and that's what I'm expecting on SPY. I need for this put call ratio to fall back below 663, 665. For me to see more continuation confidently to the upside. Now let's get to Tesla. All right, Tesla has been very interesting since my last video dropped. On my race theory video, we talked about 295 being a place where we wanted to get interested to trade to the upside on Tesla. All right, I put it out in the Discord and we are sitting at 342. I don't know if you're that great with math, but that is almost a $50 move. Okay, in less than a week or two, you could have made that money following me, trading, getting into it. If this is your first time, then stay in tune, get familiar with the channel. All right, follow the links below if you want a free discovery call. If you want to know how I spot these moves and I call them out before they happen, you can check out that link below. Book a discovery call, right? Let's see where you are, right? Then further on for one-on-one coaching if you want to. And I also have a book available for the trading community, tailored for beginners who want to know something about the market in a more broader way, in a more consistent career type based way. Those links are below in the description, and they have a free Discord community for those who want to learn and engage with like-minded people. We would love to have you, the unique trading group. All right, and again, I am Coach UV. I run the thing, and I have some excellent students and some people in the chat that you can engage with. All right, now Tesla. What do we have here? Since we have broken parabolic, all right, same thing like SPY. Parallel channel, wait for a pullback to 305. All right, 333 has to hold. 333 has to hold on Tesla. All right, we need to hold 333, or else we're going to fall back down to retest these lows of 300. Okay, that's what we're doing on a daily. Okay, 333 needs to hold that range on a daily in order for us to see continuation to the upside. If we can do that, we will have not only a double bull flag but a triple bull flag. So let's throw on the Fibonacci, see where we are with things with the Fibonacci. All right, we could pull back 315, 314, 313, all the way back to 300, okay? Right by the 21, okay? Look for those prior swings. Remember, if we can hold 333, break above 350, okay? If we can hold 333, there's a range all the way up to 350, okay? That'll be a day trade or a scout for me, or day trade rather. If I can get 333 to hold, you know, for the rest of the week, majority of the week, I want to try to take some calls to the upside and day trade my way up towards 350. 350 being a wall. Price has been dropping from there the same way it did here, and we rejected again for the second time. All right, and so it's a resistance wall. Be careful at 350. It's a psychological level. Of course, if 350 ever holds, it opens up the door for 370, 380, and so on and so forth, and we'll go on and play it by ear and by sight as the markets open and close. Okay, so that's what I'm looking for here. 533 on the daily must hold for the rest of the week. Tomorrow, the next day, any day that 333 gets, 333 on Tesla, any day that shows up, it needs a hold of support, meaning it does not need to fall below $333. Why? Because I want to trade to the upside, and that needs to hold the bottom of that range. Okay, the bottom of that range is 333 on the daily. Okay, targeting 350. I want to secure profits at 350. Okay, that's to the upside trade, and to the downside, if 333 fails, all right, first of all, if 340 fails, I definitely want to look towards the downside for puts to target 333. So the same numbers that I look for a pullback, a breakout pullback to buy, are the same magnet numbers I could use for me to buy puts to the downside. Rewind that if you need to. All right, tomorrow if we open up above 342.09, I am bullish. Again, if we open up above 342.09, I am bullish. Okay, if we can show momentum and stay above 342.09 tomorrow for the first hour or so, I want to try to take calls at 345 to 350. All right, this is the scenario, but remember tomorrow CPI, so anything can happen. So be very, very cautious. If we open up below 342, I want to target 340 and so on and so forth. I want to secure profits at 340. Got to watch out for traps. All right, got to be particular about what you're doing. Okay, now that was Tesla. Apple, we talked about that in the Discord. Apple looks really, really good. Apple needs to stay above 209. All right, we have a gap to the downside at 202. Looks like it might wants to fill, but if we fall back to 202, right, let me make the screen a little bigger. Even if we fall back to 202, it still creates a higher low than this one. All right, and so that's bullish structure. I want to look for a range rotation back and forth, the same way it happened here. Okay, all right, so I want to remember inside the Discord that I said 207.06 is your trigger for calls. Okay, and right now we are at 208.78. If we open up above 208.78 on Apple tomorrow, which is the daily close from today, 5/19, I want to look for trades to the upside. If we open up above 208.78 anytime tomorrow, Thursday, Friday, it doesn't matter what day it is. If we're above the previous close, I'm thinking bullish to the upside. If we're below it, I'm switching my bias. I want to trade to the downside. That's your gauge for puts and calls. Until you get better entries and exits and other ways to facilitate the way you trade, I'm giving you one to use. If you want to trade consistently, a system to use is the daily open and close and the weekly open and close together. Powerful together. Okay? All right, now moving on along, last but not least, we do have AKBA. AKBA is the stock, the penny stock that I was talking about. All right, listen, this stock is very profitable. They do not have a lot of debt. All right, they've been paying, actually playing in this game for a while now, and they're very profitable. And I like to look at the fundamentals of a company, okay? And I like the fundamentals of this company. And I will not go into details in this video, but I'm throwing it on you guys' radar. AKBA. I hopped into some calls today, and I also bought some shares. Parabolic move above $3. Okay, we're at 280. Parabolic move above $3, and we are at 80. First target will be 291. That could come tomorrow, who knows, but I'm definitely bullish on this stock. I want to hold it long term, and I want to see what happens, okay? Because this is not money that I need to live off of. All right, and I appreciate you guys watching the video thus far. It's been a very, very great presentation. I think if you found the video valuable at all, please, if you found it valuable, hit that like button. All right, helps the YouTube get it to other people who might find these interesting. Okay, and also hit that bell notification and subscribe to the channel so you can be notified on when I drop valuable videos. This has been an episode of Monday Madness, Monday's Madness, episode 5. All right, and until the next time, you guys, make sure you define your entry, your exits, and your risk. All right, stay safe out there, trade safe. Tomorrow's going to be a big day. All right, and I'm here for you. All right, make sure to check out the links below. All right, remember that everything you do is based on your decisions, and trading is a business. All right, trading is a business, so never give up. Do not give up. All right, study, practice, paper trade, and journal. All right, this is going to give you an edge. Follow someone who you can trust, a great mentor, right? And stick to one stock and one style, all right? You need to find out how it feels to lose. You need to find out how it feels to get into the game. And what better way to do that is experience. Experience is going to take you over the edge, all right? Listening to my videos every day, buying my book, buying my course, doing one-on-one coaching, all that stuff is great and it gets you to a point, but it's not going to give you the edge. The edge comes from actually being inside of the game. That's what I did, and I'm able to print money and pay bills with the trades that I take. All right, it's very strategic. It's meticulous. All right, it's not all over the place. It's very dialed in on what's going to happen if this, if that, and I strike. All right, based on my criteria of a high probability edge. All right, it should be boring. Okay, sorry for the little rant, but I wanted you guys to understand it. Okay, this is the Unique Trading Group, where strategy meets mindset and discipline turns into income. I'm Coach UV, and again, thanks you guys for watching. Until the next time, peace.